The key thing to remember about Bitcoin is when this whole situation started with COVID, it went down when with the Nasdaq, went up with all the liquidity. It's gone back down. Now it's gone back up with the stock market. So for it to show divergent strength away from the stock market, I think it has to probably get through this recession, which we all know is coming. If you certainly look at the yield curve, it's a matter of time. And to see if it can show divergent strength with the stock market going down. As the Fed has pointed out, they are not going to be there to cut rates, which probably is bearish for equity markets. Or does Bitcoin outperform on the way up? I look at it as it's got to prove itself. And at 30,000, about 3,100 this weekend, or 31,000 this weekend, I think it's just a little bit too risky here, particularly if we tilt over to that recession. It brings most assets, risk assets, lower.
Bitcoin's price remains above the $30,000 mark, but it faces challenges due to the potential recession. Mike McGlone, a senior macro strategist at Bloomberg Intelligence, discusses Bitcoin's outlook and the impact of geopolitical pressures on oil prices in a recent tweet. McGlone points out that the primary obstacle for Bitcoin is the looming U.S. recession, which would be its first encounter with such an economic downturn. Despite this, people are hopeful, as they believe the Federal Reserve will intervene and support risk assets if a recession occurs. It is crucial for Bitcoin to prove itself as a risk asset similar to the stock market, rather than just being viewed as a shadow of the stock market. McGlone suggests that Bitcoin needs to outperform gold and stocks to establish itself as the leading contender and not risk losing relevance. In this video, McGlone presents his argument for Bitcoin's divergent strength, discusses the outlook for crude oil prices, and shares his perspective on crypto regulations and their impact on the crypto climate.
Well, I'm much more worried that of the whole tide going out because of this recession and the risk that everybody's priced in for the bullish scenario. The Fed's going to ease, the Fed's going to save us, yet Jerome Powell said he's not going to. You look at the interest rate expectations, there's still priced for higher rates, and we're getting liquidity pools, meaning higher rates in England and Canada and most of the rest of the world. That's just not a good environment for an expanding global economy that's maybe tilting over to recession. People are hoping for, even if we go for recession, the Fed will ease and save these risk assets. The key point is Bitcoin is still very much trading like a risk asset, like the stock market. Now you look at things like gold and treasury bonds, they might be better off. So it's got to prove it. And the best way to prove it is to get through this recession and prove it. Otherwise, it's just a faster version of the stock market, which I think most people are looking for, this faster horse in the race to transition to trade more like maybe gold and long bonds. And basically, you have to be bullish the stock market here and expect Bitcoin to outperform. Otherwise, to me, the key risk is the tide goes out and Bitcoin's the fastest horse in the race and it kind of leads the way. This is a revolutionary technology, and oftentimes that's what humans do when something comes in that they don't understand, which is okay. The key thing about the crackdown, I think, is prudent, is we have to purge some of the massive speculation in space. All revolutionary technologies have massive speculation. I was reading this weekend about RCA, the radio company, went from 3 to 300 and then back down. These things happen. But there's 25,000 cryptos in each purging. And then there's Bitcoin and Ethereum and crypto dollars. That's very significant revolution technology. The key thing is Bitcoin's going so far, so fast, and it still just has it's got to prove it's not just going to go up more than the stock market. And that's the key thing. Now, most of our viewers and listeners have not lived through a true stock bear market where it drops 20%, the Fed doesn't save you, and then it drops another 20%. To me, that's the risk in the broad market. Crude oil, commodities are a bear market. They're down. They were down almost 30% for a little while from the peak, down 20% now on a year-over-year basis. And the key question you have to ask yourself is what's going to stop this and save it? Typically, it takes a long and variable lag, the Federal Reserve easing. What are they doing? They're still tightening. Now, you see what's happening in China. China's leader made a major mistake of his unlimited friendship with Mr. Putin. And what's that doing? Overall, to me, it's tilting the whole world towards recession. China's having a problem with all the data is disappointing. That's the body in motion. You have to ask yourself what stops it. So I see crude oil is more likely to head towards 50, maybe even 40, priced on what's already happened. Natural gas has already done that. Natural gas went from 10 to 2, and now it's bouncing. And I see the whole commodity market in a bear market, and the question is, I don't see anything stopping it. So I think the best commodity might be continue to perform well in the next year or so, is probably gold as we tilt towards recession. And maybe we eventually get a Federal Reserve pivot or ease. But for a bottom in the commodity market, typically we are way too early. Typically, you need to see a lag to easing, and we haven't even started that yet. And the Federal Reserve and most central banks still tightening leads to the recession being over. Right now, we're seeing a bounce. But I did make the call for $50 a barrel a long time ago when it was much higher and it was on the way up. That is the trajectory. The key thing is that's what it always does is commodities always go towards near their cost of production in the long term, in particular when economics get a little dicey. And that's happening right now. $50 is the average cost of production in the U.S. In natural gas, the average cost of production is around $2. That's where the market's bottom. So right now, the key question I like to ask you and our viewers and everybody else is what stops this bear market in crude oil? OPEC's trying to help by cutting supply, but typically what happens when OPEC cuts supply, that happens in bear markets. They're responding to what they see in the macro in a prudent way for a cartel that's trying to boost prices.
Critics of the digital assets industry argue that it is a buzzword-driven and unsustainable field, often chasing new trends without considering long-term sustainability. This sentiment was echoed when Bitcoin, one of China's pioneering crypto publications, recently announced its complete departure from the industry, refocusing its coverage on AI and the metaverse. Furthermore, venture capitalists, seemingly bored with blockchain and crypto, have shifted their attention and funding towards AI startups. In the first quarter of 2023, venture capital funding for crypto plummeted by 80% to $2.4 billion, while AI startups raised $1.6 billion during the same period. Despite the hype surrounding AI, the technology is still in a stage between the peak of inflated expectations and the trough of disillusionment on the hype cycle. Its implementation remains slow, expensive, and often produces unreliable outputs, with up to 20% of generated content being hallucinatory. Remarkably, stakeholders seem to have forgotten the lessons learned from the disappointment of the enterprise blockchain bubble and eagerly embrace new technologies once again. In recent developments, the correlation between Bitcoin and the tech-heavy Nasdaq 100 has reached its lowest point in 3 years, indicating a possible decoupling between the two. Simultaneously, the correlation between Bitcoin and gold has surged, suggesting a closer relationship between the two assets. While the Nasdaq 100 has entered a technical bull market, showing a 20% increase since its December 2022 lows, its correlation with traditional risk assets has weakened. Gold, on the other hand, reached an all-time high of $2,000 in May, and Bitcoin has experienced a rally, surpassing $31,000. The question remains whether Bitcoin will emerge as the fastest horse in this race, and opinions on this matter are welcomed in the comments section. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.